Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, pleasure to be back on the show.
John, did Scandium International ever update its pre-COVID presentation after scoring a critical metals recovery host site with the Phoenix project of Nevada gold mines?
Well, Jim, every few days I would check the website, and sure enough, there was still the March 2020 presentation on it that talked about the letter of intent initiative to fill the offtake order book for the Ningen project, and nothing about these new initiatives that have become apparent through their 10K and 10Q filings, and with that blockbuster news release that they put out at the end of June talking about the Nevada gold mines scoping study and terms of a deal to recover critical metals from the Phoenix copper oxide circuit. But finally, on the Tuesday of last week, there was a new presentation. It's a short one, 13 pages, but it is chock full of all kinds of new information. They answer questions that we didn't know, like the $2.7 million U.S. cost of the scoping study with Barrick on Phoenix. How was that going to be split? And they answer that question. It will be split 50-50 between the Nevada Gold Mines joint venture and with Scandium International. They also had a couple pages devoted to their HPA, high purity alumina plan, and had a lot of details about that. Plus, they actually included forward-looking statements along the lines of what sort of revenue these two projects should generate and what sort of cash flow, EBITDA cash flow, is possible. And those are really impressive numbers. So now we're looking at a situation where over the next 15 months, they need to complete three things. One, they need to do the critical metals recovery study for the Phoenix operation, and that's, of course, going to cost them $1.35 million. Then they also disclosed that they are going to be responsible for that 100% responsible for the refinery, which is downstream, which purchases the concentrates from the Phoenix facility. And that study, which is not really a feasibility or scoping study, it's really an engineering design study, that's going to cost them $1.5 million US. And then they also disclosed that for a 2,500 minimum ton per annum HPA plant, that will cost $1.8 million also over the next 15 months to complete a study on the feasibility and obviously include all the engineering required to make this work. And this is all based on patent pending applications that they have for making high purity alumina for using conventional off-the-shelf physical alumina feedstock, but it also mentions a liquid feedstock. And I think the delay that with regard to coming out more about the HPA is that I believe that from these critical metals recovery circuits, they'll also be able to recover or siphon off in liquid form an alumina-rich solution from which they can make the high-purity alumina through whatever system that Willem Dijkstein has designed. Now, this presentation, most people don't really know about it, so the stock has continued to sag. One might have expected it to be out right away when that deal with Barrick Nevada Gold Mines was announced at the end of June. But it turns out that Barrick itself had to approve some of the stuff in there. And one of the things is the capital cost for the CMR system comes in at a staggering $100 million US. And that's more than the $88 million needed to build the Ningen project in Australia. And I said, how can this thing cost so much? And then George Putnam told me, well, Barrick, part of that is the cost of the refinery, and they have not disclosed the scale of the refinery. I would think that with the one deal that they have with Barrick Nevada Gold Mines, they only have one project. They have not had any dealings with Freeport. They had a couple others that they were negotiating with earlier this year, and all of this was very sensitive, which explains why they completely missed that whole battery critical metals boom in the first quarter of this year because they were in these sensitive negotiations. If they started tooting their horn about all the stuff that they were doing, they might have lost any sort of hope for a deal. So they had to sit through all that. And then we had the slump in the second quarter, and they finally announced it. And Barrick, for some reason, doesn't want the capex of that CMR recovery plant, which they've obviously already scoped out, disclosed to the public. So somewhere between that $100 million is a big chunk for which Scandium International will be responsible for, and it is a key part of the CMR recovery because the deal that they've done with Barrick Nevada Gold Mines is it's to share at that level concentrate value 50%, and any value that is created by upgrading through the refinery, that is collected on a 100% basis by Scandium International. So for Scandium International to really make a lot of money and do something with the Scandium, it needs to have this refinery to upgrade. And one of the things that they included in their discussion of Scandium, and the whole Scandium component's not dead, they're not just a critical metals recovery company or an HPA manufacturing company. They still want to build out the Scandium market, and they're doing it through this incremental supply, and Scandium is one of the 4 metals that they have listed that they will recover from the Phoenix operation. And one of their little sort of bullet points, they point out that an important market for them is going to be the non-alloy applications, such as the scandium oxide in powder form that Bloom Energy needs for its operations. And then it's got a whole list of other applications, some of which Materion has been developing scandium applications for piezoelectric applications. So with the small amount that they will in the beginning get, they're probably going to bypass the alloy market and just make a high purity technical scandium oxide for these obscure electronic style applications. But the question now is, what is the funding strategy? I put together a list, tabulated all these things. They have about $1.5 million in accrued liabilities that they need to clean up. And with the pilot plant study cost of $1.8 million, the refinery engineering cost of $1.5 million, and the 50% share of the Phoenix and the ongoing overhead of an operation. There's going to be a lot of people that they need to employ to make this happen. They need to raise $7.5 million US to take care of all this in 15 months, after which, assuming positive outcomes on everything, they will need to raise $125 to $150 million to fund all these different applications. So this PowerPoint presentation that the company published, this is a major sea change. It makes clear what their new strategy is. They are less a scandium mining company and much more an industrial growth company, because the 2,500 tons per annum of HPA, that's just a fraction of what the world is consuming, and that market's growing 6-7% per year, and it's a key input for the battery market. So that can be scaled much bigger because you just duplicate the manufacturing process. If you've got a flow sheet that works for making this at a lower cost than the competition, well, you can just grab much of the growing market for HPA. And of course, the critical metals recovery plant, if this works with Barrick, they've got a template for a deal. They got pretty much everything that they wanted. And then they can go to all these other groups and just sort of say, well, this works for Barrick. Here's how it can work for you, how it helps you, how it reduces your future reclamation costs, because these other metals that your copper acid solution dissolves accidentally and that you pump back in, well, it sits in your tailings pile or your heap pile in a pretty much liberated form, and down the road that's going to leach out and into the system, so it's not like it's still bound up in its original mineralogical suitcase. So if you can get this stuff out and make money from it and save your future reclamation costs, why not do it? So there's that repeatability on many times down the road. So the story now, all the pieces are coming together, but the question is financing. When are they going to finance? And they've been quiet on that front, and I've talked to various subscribers who in the past have given money to them, and they have not really been contacted. So I have a suspicion that maybe somebody big in the wings is going to be doing a financing, and what this company really needs is a new backer, some sort of venture capitalist entity who understands the growth potential of this, that this is going to be a much bigger deal down the road, get this initial financing out of the way, and then away we go. And the Ningen projects, it's still their ace in the hole. Down the road, if the scandium market gets up to that 50 ton per year that I think is the demand level, that's the tipping point for a lot more demand growing, they can then build that. It's all pretty much ready. So with this PowerPoint presentation, we've reached a turning point, and what the market's waiting for now is, okay, what is the funding strategy? And also what it's waiting for is, suppose they do some big financing here at 20 cents and they get the next 15 months taken care of. What are you going to do? Are you going to behave like some private equity entity and go away and not talk about anything and just get this all done, and 15 months from now show us the results and say we need $150 million while your stock's languishing at 20 cents where you started? At least in the private equity world, they just decide, okay, we spent this money, we've done this, the next round will be at a 5-10 times valuation. Well, that doesn't work in the stock market. In the stock market, you have to be feeding the market story all the time. So the next 15 months, you need to give us updates. They need to have us marketing campaigns with each mini milestone that they reach. They need to be attracting a bigger audience which sees the risk and uncertainty being removed as they step through these scoping studies, and then have this thing ready a year from now, ready to go into the big leagues and end up becoming a major industrial growth company. So stay tuned. In the next couple of weeks, hopefully we see who is going to come up with the money and what sort of going forward marketing strategy they will do so that this company gets the profile that the fundamentals suggest that it deserves.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Kaiser. John, is there anything new at SK Mining's SIB project in the Golden Triangle?
Well, on July 13th, they put out a press release talking about the initial drilling on the Jeff target on the SIB project, and it didn't really make a lot of sense until a couple days later. Quinton Henney and Corey Fleck did a webinar walking through an updated presentation where they talked about the big picture potential of the project, what the implications of the Skytem survey are that has been completed. They've only got the data for the northern two-thirds of the project. They're still awaiting the data for the southern third. That should be coming out any day by now. They should have that all figured out. But what was really interesting is, and I do recommend everybody go to their website, get this webinar, invest the 50 minutes to get on top of this. At the very end, Quinton introduces a cartoon which finally puts this whole TV Jeff system that they drilled last year with high values, but it all looked like they were drilling little pimples and that didn't amount to anything. They put together a cartoon of what they think it is happening. And the drilling that they're doing now it's a layer cake that's tilted to the east, and the replacement style mineralization that has those wonderful high-grade gold and silver values, it's within certain mudstone horizons, and they're following this down dip towards the east, and they've been getting thicker intervals. You know, they started drilling late June, and they may have seen the visuals in the first 2 weeks. Assay turnaround is the big wild card. We have no idea how long it's going to take. But they think that this replacement mineralization are sort of lateral limbs to a major feeder system that if you go high enough up into the layer cake, you'll find the most recent and last event horizon for the VMS system that created Eskay Creek 1. You'll find a vent, a mound, and if you're lucky, maybe you'll find a downslope, a debris flow that hosts a 21B zone equivalent. That's not really the dream that John DeDecker has come up with. In his view, there are at least 3 seafloor time periods when there were VMS episodes that created local vents. He's not so excited by the venting onto the seafloor, such as happened at Eskay Creek. Eskay Creek is kind of a super freak in its own right. John studied under Thomas Monarchy, who has studied the Eskay Creek deposit, is very familiar with these systems, and what they say is that it's the replacement mineralization, the sulfides that form 150 to 200 meters beneath the seafloor. That's where you build the tonnage, the ounces of gold and silver. That's where the really big prize is. What manages to get exhaled onto the ocean floor as a smoker type system, maybe with the SEDEX type deposits that form those lead zinc silver systems. Maybe it works with these, but with these VMS systems, it's in the feeder replacement zone beneath the vent itself where it all piles up. And in this particular cartoon, Quentin is assuming, what they're encountering is just sideways bleeding of sulfide mineralization into these receptive mudstone horizons, while the primary fluids continue the upward march. And of course, another reason to watch this video is Quentin does a good job explaining how this really is a district play where you're looking for not just another Eskay Creek deposit, an Eskay Creek 2. It might take them forever to find that, and it might not even exist. But what appears to be clear is that this was a former basin, a large basin that was, the layer cake built up, and there were multiple episodes of VMS events happening, and there could be dozens of VMS deposits, and the fact that there is already this known high-grade gold-silver there, this tells you this is a very, very special district. The company controls all of it 100% now. John DeDecker developed that model last year of how this compression from the east and west caused multiple folding. Quentin uses the metaphor of, imagine a carpet that's been sort of crumpled where you have all these folds. Eventually it got paved over by some basalts, and then it got the Bowser Lake sediments dumped on it. But that all happened before the folding, and the folding created these anticlines, and erosion has stripped away the Bowser Lake sediments, which are worthless, and now what's left in the limbs of these anticlines, the Skytem survey is actually a powerful tool for seeing where the stratigraphy is, where the layer cake is. And the Skytem is also showing little pimples. And in that press release, they showed us a number of new pimples that are clearly not related to the Bowser sediments, which are potential sulfide bodies. The most interesting one of which is on the eastern anticline, where they have this very high-value Bleg anomaly that came out in the property-wide survey that they did last year. This thing, they have a 2-kilometer conductor associated with this. This is at the northern end. It's looks very similar to what the 21B zone itself is. They may not be able to drill it this year. You can tell they really want to drill it, but that's subject to permitting, and of course with the short season, that may not happen. So at a minimum, this will be a big target for next year. But in addition to the TV and the Jeff zones, they've got other targets in there. They've got 4 drill rigs going. They're going to drill a minimum 30,000. They're hoping for 40,000 meters. They will put a couple holes into the Sib-Lulu target. That was the focus for the past 4 or 5 years. But they seem to have downgraded its prospectivity, mainly because it's on the western limb of the main anticline, and it's buried under Bowser Lake sediments. And if there's anything there, it's going to be expensive and tough to find it. And so the key now is wait for assays on the Jeff drilling. Wait for more news that they are finding the vertical feeder part that cuts through the stratigraphy that they can start chasing towards a possible vent mound where a 21B zone type of system may have existed. But the main thing we're going to be listening for over the next, watching for over the next couple of months is evidence that these other sulfide targets, they now have a couple dozen of them, turn out to be similar high-grade gold, silver sulfide replacement systems that they can then follow up next year. From the strategy that they're doing, they're just trying to test all these targets to see what they are, and they're not going to do any delineation drilling because the season is too short. Resources are short right now, and they will go back next year. The project still has a $500 million valuation, which is high for something that doesn't have a clear-cut zone where you can see, oh, here's the size, all we need to do is drill it off and come up with a resource estimate. No, we are not there yet, but everything that they've put together shows that this is an extraordinary district-scale VMS system which is already famous for the richest VMS deposit that's been found in history. And the other news we're waiting, they promised to give us the Skytem results for the southern portion, third of the project. We have not seen that yet. They should be in possession of that. In the southern part where you have targets like GFG, C10, TET, and Spearhead, there is also a tremendous Bleg anomaly. And the geology is somewhat different down there. It's more metamorphosed, but the Skytem may illuminate what is going on down there structurally and set the stage for some surprises down at that level. So, we had that mid-July update. We should soon get another update in terms of assays. No idea. But if we get visuals from other targets being converted into sulfide zones, that's going to give the market its boost that it needs to get out of the summer doldrums that everything is trapped in right now.
We'll have more with John Kaiser right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, are there any new discovery plays we should be watching?
Well, Jim, late last year, I introduced Northern Superior Resources and its Lac Surprise project in Quebec as a new Discovery Watch candidate. Lac Surprise is about 60-70 kilometers southwest of the Chibougamau copper-gold mining district, and its claim to fame was that it is west of the Nelligan project that's owned 80% by IAMGOLD and Vanstar. Now, at the time, I did not feature Vanstar Mining itself because Vanstar, which acquired this project back in 2010, 2012, did enough drilling to show that all the historical work in that area may have missed this new zone associated with a magnetic corridor. In 2014, they auctioned it to IAMGOLD, which then went on to delineate a deposit for which in October 2019, they published the maiden resource of about 97 million tons of 1.02 grams per ton gold. And this was a set of tabular type bodies hosted in sediments that was a sort of a disseminated sulfide associated system, not very many high grade values in it, but just located properly so that you can open pit mine this system. And they even won the Discovery of the Year award in October 2019. And once this resource was out, you could see, 3.2 million ounces, probably 2.9 million recoverable based on the sort of metallurgical work IAMGOLD had so far done. And the project was discovered in March by Peter Grandich, and the stock had been sort of slumbering at 25, 30, 40 cents. It never really got any respect from the market for its 20% net, which is carried until through production, which is a really strong deal. IAMGOLD is in charge of that. The only issue is that IAMGOLD does everything on its own timeline. Well, Peter Grandich saw the 3.2 million ounce resource, saw the potential for expansion, got excited, bought the stock himself, his audience followed, and the stock ran as high as $1.76 last year. But then eventually it became apparent that IAMGOLD was not moving as swiftly as everybody wanted. There was also a management change at Vanstar. The founder, Guy Morissette, retired from the company. A new board was appointed. It's now headed by the new CEO who came on board early this year, J.C. St. Amour, and he's taking charge of the company. And somewhere along the line, Peter Grandich lost interest in this story and sold off his stock and his position, told his people, I'm off to other pastures. Nothing's happening for a while. And to some degree, he's justified, because last year IAMGOLD did not do a lot of work, partly due to COVID. This year it has announced a significant drilling program. They've got 5 of 15 holes as infill in there. And but the main part, the western extension, that will unfold by the end of the year. And it's the western extension where there lies maybe a 30 to 50% increase in the resource. And the market's problem has been, how do we value a system like this? And I decided to take a close look at it. When the stock went down, as Peter's audience exited the stock, the valuation got back down to 50, 60 cents, where it looked like, okay, for patient people, this could be a very good discovery that has potential for expansion. Sit on it, wait a few years, and with this work that IAMGOLD is doing now, it sets the stage for next year to begin the work of a PEA, and it might take another three years or so to reach feasibility study. IAMGOLD is not a well-loved stock in the market. They are busy right now building the Cote Lake open pit operation in Ontario, but that's the kind of company which specializes in these low-grade open pit systems, which would really benefit if we do end up seeing gold ramping through $2,000 and going up. So at some point, IAMGOLD is going to cease being this unloved company and will become much more aggressive with projects such as Nelligan. Right now, they're doing the work to infill, and the infill drilling itself may increase the resource also, because that will fill in gaps and allow them to include parts of that system that were not available for a formal resource estimate. And if there's that luck on the western extension, that will make it big, better. And I did say what I said, okay, but so what's the upside? You know, when Peter's crowd bid the stock up to $1.76, what were they thinking would be the exit strategy? And so I did an outcome visualization. First Mining Gold had published a pre-feasibility study for its Springpole project, which is very similar in size, similar in scale. So I did an outcome visualization for a 30,000 ton per day open pit mine. That's only good for nine years. I borrowed the same sort of capex and sustaining capital costs as First Mining Gold used, plus I borrowed some of the numbers that IAMGOLD used in defining what its pit shells were. And this project would be worth about $1.1 billion Canadian at that scenario that I've come up with. And Vanstar's 20% net share in that would be $3.56. And the stock's languishing at 50 cents. The market's saying, IAMGOLD's not fast-tracking this, nothing's going to happen, this company's just going to wander. IAMGOLD's going to make some snap bid to just take them out, do a mercy killing on it. But with this new group of people on board, led by J.C. St. Amour, I think this company is not going to be ignored. And I think at these levels, 50, 60 cents, where the stock is now sitting post Grandich exit, this represents a very interesting stock for Discovery Watch people to take a close look at. I'll be reviewing my analysis as to the outcome visualization, what makes this tick. And, you know, I did an imaginary thing, well, what if they get it up to 150 million tons, you know, get a 50% boost at the same grade? We would keep the same scenario, and I end up with a sort of a $5 to $6 target for that interest. And the thing about this deal is, once IAMGOLD has done a feasibility study, it will have a right to buy Vanstar's 20% interest at fair market value. And that will be sort of some time discount of the after-tax net present value of the Nelligan project when that feasibility study is done. And it'll be done by a third party, and they'll end up getting cashed out at that. Except Vanstar gets to keep a 1.5% NSR. And I've done the numbers on that, and if they don't blow up the capital structure in the meantime, well, the stock's worth that down the road simply as an NPV of the NSR that this project would generate. So I suspect well before a feasibility study is done, IAMGOLD, when its stock is much higher priced and it can be used as a currency, we will see Vanstar Mining Resources disappear. So the challenge for the company in the meantime is, can they get the public to appreciate the value of this asset that's already in place, assign an optionality value for its expansion, and an improvement in the gold price that isn't just an inflation adjustment? And can they use a higher stock price as a form of currency to acquire other strategic assets, pull them into the company, and build this thing into a significant Quebec-based junior? So Vanstar Mining Resources is the stock to watch. As far as Northern Superior Resources is concerned, they published a news update in early July, and that was mainly for the Falcon Zone, which is more a volcanic gold-silver zone. They have not published anything for the 26 holes they drilled on Target 1, which would be the projection just west of the border with the Nelligan project of the Renard Zone, where it is heading. The drilling that IAMGOLD is doing this summer or fall when they get around to it, it's still at least a kilometer short of the border, so we won't learn anything as to how close that Renard Zone gets to the Northern Superior Resources border. But right now I'm waiting for an update from Northern Superior as to how that projection of the Nelligan-style mineralization ends up being on their Lac Surprise project. I'm disappointed they were unable to get a drill program going in the winter in the TPK project in Northern Ontario. And as we discussed a couple of weeks ago, Northern Ontario, everything's frozen right now with fire danger risks. And in the case of TPK, the key there is for them to get approval from the local First Nations group to go drill the target that's the source of their big golden soil till anomaly, which is under a lake. It needs to be drilled when it's frozen. And maybe in early 2022, TPK will finally get the drill program that it deserves to prove that what that giant apron of gold and soil anomaly is all about.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.